Good morning, everybody. It's the 6th of July. Welcome to another episode of Talking Ball. Hope everybody's doing well. How are you doing this morning, Steve?
Yeah, not bad, thank you. Bit of a bad
Good.
back, but I'm soldiering on through.
Still in pain this morning, are you?
Still in a bit of agony at the moment, mate. But
Sorry to hear
it's
that.
yeah. Well, I like to have a moan, don't I? So
Not too bad.
well, you
I know
paused a little
worse.
bit there.
Yeah. Just trying to compare you to other people I know that moan in my life, and don't think you're quite there. Okay, so let's get on with this. Let's have a look at the headlines. It's been a pretty tough few hours for the markets and few days, certainly if we're looking at some of the indices, but we'll get onto those shortly. Prior to doing so, let's have a look at what is moving the market. So ECB protests grow. We saw that the bank could bring the inflation rate back down to target by holding rates for a certain period of time rather than hiking them further. This is according to one of the members, Visco. He added that he did not agree with the idea that tightening too much was preferable to tightening too little. Overnight, we also had the Hawkish Fed minutes from the Federal Reserve policy meeting. Almost all participants judged it appropriate or acceptable to leave the target rate unchanged, but some indicated they would have supported raising rates by a further 25 basis points. There were further concerns over inflation, with almost all members stating that upside risks to inflation remained key to the policy outlook. As a result of this, US Treasuries were already on the defensive ahead of the Fed minutes and lost further ground. According to the minutes from June's Federal Reserve policy meeting, almost all participants judged it as apt. The Bank of England expected to increase again. There was a further shift in the UK futures during Wednesday, with markets now pricing in a 50% chance that interest rates would be increased to a peak of 6.5%.
What?
There was, ouch. There were net dollar gains yesterday, and the yen outperformed. Higher yields helped underpin the dollar, with net gains on the day, especially with the euro and Chinese yuan generally under pressure. Equity markets are under pressure too, amid the fears over higher interest rates. We've got some jobs data today. There are three important US labour market releases today: the ADP jobs number, the jobless claims, and the JOLTS job openings. This is all ahead of non-farm payrolls, which is due out tomorrow. We've also got ISM data due later as well. US also released that data point with expectations of a recovery to 51.3 from 50.3 previously. So plenty going on. We'll get back to the data that's due out a little bit later. But ahead of that, let's take a look at some charts. Steve, do you want to take a look at the crypto market to start us off?
Yeah, well, I mean, I'd rather look at bloody sterling markets. I think with that sort of like prediction, love it. We love high interest rates, don't we? It means, the funny thing is, it means that if you've got a mortgage, obviously it's not so funny because like your mortgage payments go
Which
up.
is most people.
Yeah, but if you've got savings, you can earn at least 6%, or maybe even at some point 6.5% on maximum of £5,000. So
risk-free.
Really, and yeah, well, risk-free. But once the banks start realising how much money they lent out at 2%, they might start sort of like claiming poverty and claiming it back off the taxpayer. So taxes will go up and everything. So yeah. So much to look forward to, Joe.
Paint a pretty picture there. Thanks, Steve.
Anyway, let's take a look at Bitcoin, and Bitcoin has reacted quite well over the last 24 hours, should we say?
Share your screen for us, Steve.
Yeah, sure. That might help. Here we go. We could see sort of like maybe looking at the short-term picture, although, let's reassess. Let's think about this weekly picture, which looks pretty positive to the upside. This inverse head and shoulder, buddy, that's enough. This inverse head and shoulders has reacted higher, broken through the neckline, come back, retested, and exploded higher. We still haven't broken through that resistance at 32,500, which has been sitting there for absolutely millenniums. But the measured move target for this is a move basically to 35,000. So I wouldn't be surprised if we do get up there. Overall, my outlook is still bearish on cryptocurrencies. I still feel like we've got a bit of a shakeout before we do see eventually maybe higher prices in a few of these. I mean, there's thousands of them, but I expect a few to survive, and maybe that will be our monetary system going forward eventually. So looking at the shorter term charts, which people probably are more interested in, we have had this move higher. We've stalled just above the previous resistance, which was last Friday at 31,035, got up to 31,500 and stalling around here. Now, this is telling us that obviously two potential things happening here. Could be a bullish flag, which if it is a bullish flag, then we'll have some sort of measured move target. If we do get that break to the higher, to the upside, we'll have some sort of measured move target, and that target in 36,000, which isn't far away from that inverse head and shoulders target. So that's one to look out for. However, if we do run out of a bit of steam here and prices can't be maintained, then I wouldn't be surprised if we get a breakdown. The neckline for me would be 29,500. So a break below there, and we could form basically a double top, triple top, whatever you want to call it. And that would have a measured move target to the downside of, this is how we measure it. This is how we do it. Something like that, maybe a move down to 27,500. So there's the two opportunities as I see it. I don't think it'll stay in this range for very long. Either give up the gains, see the momentum stalling here, but it could be a bullish flag, so be aware of that. XRP seems to be quiet of late. That's still languishing below the 50-cent level, 47.80 trading, support coming in at 45, and obviously we've got that resistance up at between 56.5 and 58.5 on XRP. Let's take a look at commodities, something a little bit more solid on the asset front, and we're seeing this breakdown in price action. We've been down to more recently. We've been down to 1893 and rallied higher over the last week or so. But yesterday's price action was pretty bearish. We had a spike up to resistance at 1935, which we highlighted on Tuesday's show, I think it was, and that's basically, then we engulfed the whole of the bodies of Monday and Tuesday and closed lower at 1915. We're trading just above it, 1920 trading at the moment. So, but really that looks a bit ominous for short-term price action. However, we still haven't taken out, maybe you could say we haven't taken out Monday's low or Friday or Thursday's low. So there's still a little bit of hope here. And if you break this down on a shorter term time frame, let's break it down here. You could, let's do it on the 4-hour chart. Might be a bit clearer on the 4-hour chart. We could be seeing another inverse head and shoulders formation. I love to look for these formations, and even when there isn't a formation, I seem to see it. Take that as you will. Could this be the sort of bottoming formation that we're forming? Obviously, there's a lot going on geopolitically. The dollar's a big driver of this. Dollar index is like firmed up a little bit over the last 24 hours. So that's led to a little bit of a sell-off in gold. But yeah, so really maybe more eye on the dollar, but also think about what's going on in the world as well from a geopolitical standpoint. Right, that's gold covered, and let's take a look at WTI crude oil, which has continued to look pretty positive over the last few days. Let's take a look at the daily chart. We've hit that bottom around $67. Oh, hold on. No, update your chart, Stevie boy. Don't know why this is doing this, but we have got this really nice support level coming in here, 67.10, and we've reacted higher from that from the Wednesday the 28th of June. You can see a really nice upward, well, just over a week of price action, and we're just about to hit that resistance level at 72.63. So be aware of that. And Wednesday oil inventories out yesterday, so obviously that proved to be sort of like quite satisfying, the number, and prices have continued to move higher. Short term, 1 hour and 4 hour above the Ichimoku cloud, so we've got in a short term uptrend, and potentially maybe further upside to that resistance level. I think that's about it, unless anyone's asking for
No.
Commodities? No. Okay.
No.
Well, let's take a look at the dollar, Joe.
Yep, let's do that. So starting off with the dollar index then. So as Steve mentioned, it has firmed up a little bit, potentially forming some sort of bottom here over the more medium term, but still plenty of work to be done before we can be convinced of that. Support again, 102.23 as we keep talking about, and prices continue to sort of grind to the upside. Seems to have found a little bit of resistance in the very short term, somewhere around this kind of region, 103.43. So if we can break above that, then we could trigger further gains towards 104.20. But at the minute, it's kind of pretty sideways, pretty choppy, but holding on to these gains of late. So what impact is that having on euro US dollar? Well, pretty much the same, to be fair, but just in reverse, we can see prices in the last few sessions have been reasonably choppy, but ultimately still holding up quite nicely above 108.44. So while that continues to be the case, there is maybe potential for a little bit of a bounce towards 109.42. If this level is breached on a closing basis, that's 108.44, then it could trigger further downside in the short term towards support at 106.40, and again potentially form some sort of larger top pattern here. I mean, the warning signs were in place when we saw the break of this bullish trend, which happened back in May, and since then we've just kind of been pretty sideways in price action, but potentially forming a larger kind of top formation here on euro US dollar. And to confirm that, we need to see a break of 105.31. So no immediate threats of that at the minute, but something that I think we should keep in mind. Let's take a look at sterling. So as we know, we heard from the Bank of England that rates potentially could go as high as 6.5%. So it's been quite supportive for sterling. We can see overall the trend remains very positive. Ultimately, we broke through resistance here at 126.66, and prices continue to trade above that for now. We saw a nice pullback to trend support, also some horizontal support in here at 125.99, and the buyers stepped back in with this bullish engulfing candle on the 30th of June. And prices, although haven't really run away to the upside, are looking pretty robust for the time being. Next resistance on the upside is up at 129.81. Let's take a look at dollar yen, see what's happening here, because there's been a pretty big move to the downside, 0.65%. So a bit of yen strength that we're seeing. That comes pretty much in line with this resistance level at 145.10. We can see this previous low from back in October 22. We rallied into that level. Bit of consolidation here before a continuation higher. Then rallied into resistance and now seeing a bit of a pullback in that. So potential for a bit of a correction, maybe down towards 142.50. All in all, the trend still looks pretty positive here in favor of the US dollar. So let's see if this yen strength can hold for a bit longer, but I wouldn't be, I don't think, ready to back that entirely just yet. What else should we take a look at? Maybe some, let's look at the commodity currencies. Not much changed here, very choppy still. A bit directionless. I imagine the same on New Zealand dollar. Bit of improvement there. So favouring New Zealand dollar over the US dollar in the short term. Resistance up here at 62.61. Let's take a look at dollar CAD. That broke down through major support here, but is attempting to get back above it. A decent day yesterday and a bit of follow through today. So potentially a bit of a short-term bottom here. If we take a look at that on the intraday charts, we may be able to see something a little clearer. Maybe some sort of bottom. Yeah, it looks to be a nice bottom in place there with resistance, which should now be support somewhere around this kind of level. A bit messy. But all in all, it does look like it's formed a little bit of a bottom and prices are continuing to move to the upside. So maybe a candidate in the short term for higher prices there. I may come back to that in a bit. I think that's as much as I wanted to cover really on the FX. Doesn't appear to be any further requests on that. So let's zip through these, Steve, and move on to the indices, because I think these are looking quite interesting.
They certainly are, Joe. And funny enough, I'm personally, I did sell DAX the other day, a couple of days ago, just above the 16,000 level. I think it's 16,050 something. Stuck my stop at the high, so sort of like felt like a big risk, about 150, 160 point risk at the time. But it has broken down. I've just like shut my eyes and just let it get on with it, thinking like we could have a little bit of a wobble in the indices this week. And you can sort of see that basically it's being dominated by this the week of the 19th of June, which was like a bearish, almost a bearish outside candle, definitely a bearish engulfing candle. It's engulfed all the price action from the previous 4 or 5 weeks, 6, 7, 8 weeks probably, if truth be told. Last week we did have a bit of a rally higher, but we've given up those gains already. Not the sort of thing you normally see in the indices. They normally sort of like have quite a sustained, you know, even when they get a big sell-off, they have quite a sustained sort of like period of prices moving higher, supported by the powers that be. Let's look at the daily chart. It does look a little bit tender and a bit nervy. And again, you can see that sort of like potentially a head and shoulders, but definitely a double top formation with this high from the 19th of May, the all-time high that was posted more recently, 16th of June. And we've got this neckline, the bottom of the neckline coming in at 15,625. But you can see that there is this level that has proved quite important previously. It was the high from the 7th of March. You can see there 15,706, and it's proved to be quite a pivotal level coming in here. It's like the open, the close of a couple of candles historically, but definitely seems to be a little bit of a line in the sand. You can see the sort of formation I'm looking at. All this could equate to a bit of a measured move, and if we take maybe even just this level, just give you a rough idea, if we do get a break of this support level, this very strong support level, we could be looking at around about 15,000 as an interim target. So nice price action into this, very solid 4 days of negative price action. And but you know, we still got to overcome this support. So let's not count the chickens yet, Stevie boy. What else are we going to look at? Let's take a look at FTSE, because FTSE has been under a bit of pressure. This is obviously very heavily linked to the dollar. UK rates obviously have an impact on FTSE as well. So you can see where some of the companies may be struggling. If we're sort of talking about 6.5% rates, it's definitely going to have an impact eventually. Bullish hammer from the 26th of June has now been taken out. We had that interim rally up to 75.60. We've broken down below it. We're down below it now. It does open up potentially a sort of like move towards this longer term support level, which probably comes in around about here, 73,004. We haven't closed below 73,014 since November 22. So that's sort of like the price action. We're not very far away from it. We're only 100 points away, Joe. Good potential really for further downside price action, and really that would leave a little bit of a messy one. We've got highs at different levels, but you could still say this is a double top formation, breaking the neckline. If we do manage to sort of like take that out, you're looking at 6,700, around about that level as a measured move target. So pretty ominous looking, but I'm sort of jumping the gun a bit because we've got these big support levels that we haven't broken through yet. So still a long way to go, but you never know. You never know. Last 2 days have been negative on, obviously we had July the 4th this week. So very, very quiet day, July the 4th. You can see here price action. This market did open for a short period of time. And Tuesday's price action and today's have been negative. We're tackling support now, which comes in at around about 34,163. We're below that at the moment. So a break of there could open up the downside, and also that could form a bit of a double top here. So next support after this, if we manage to sort of like maintain levels below this level here, next support would be around about 33,600. NASDAQ again, potential for a double top, but a long way to go yet. We've got support on the neckline coming in at 14,718. After that, 14,300. S&Ps, similar, same sort of formation or chart formation that we're seeing. 4,332. So 4,332. That's the neckline. That'll be the next support. And then we could get a little bit of support coming in around about this upward trending support line. This potential upward trending is only 2 points connected, which would come in just below the 4,300 level. After that, major support level coming in at 4194. So yeah, this is where we are. There's the indices. Few questions.
Well, the Nikkei, Steve, what's that looking like? That's been kind of the
Nikkei.
outperformer.
Yeah, I mean, it's similar sort of price action, similar sort of formations at the top, a double top formation potentially. You know what I'm like. I'm always enjoy the bear markets in indices, so I'm always looking for that negativity going against the trend. You know, and it doesn't necessarily, just because you've had this long-term trend up, you can catch them sort of days where you do make sort of like decent multiples if you get it right. But it has been a really solid move higher. You can see, let's take a look at the weekly chart. Yeah, all right, let's not go any further than that. I don't know whether this, yeah. I mean, for me, I mean, that's sort of like explosion higher. And I suppose you could say potentially there's a little bit of a warning sign when we took out this downward trending resistance line and then took out these horizontal targets. But look at how that's really exploded higher. You know, Japan obviously benefiting here. What's their currency's been like? Been under a lot of pressure, hasn't it?
Well, yeah, and it's been just smashing it, hasn't it? Sorry, on the downside, it's
Yeah,
been
yeah.
super weak.
Slam
Yeah, but
dunk.
it looks as though it's maybe having a bit of a reversal over the last 24 hours or so. Some of the
What's the
charts
rates
looking
like in
quite
Japan?
interesting.
That not
Been
bad
quite low.
dividend
They haven't
type numbers.
changed them,
Yeah,
have they?
yeah. So, I mean, this is sort of like maybe, you know, that sort of environment lends a support to the sort of like Japanese indices. There's 225 in this indice, 225 companies. But yeah, this, you know, you could say, what are we looking at? Are we looking at a bullish flag for another extension higher? I very much doubt it, because this has been exponential, which I mean by that, it's like it's happened far too quickly. This sort of like rally, this percentage rally, which is, you're talking about a 29% rally in the space of, well, since the start of April. Yeah, since April Fool's Day.
Yeah.
What a fool! How did we miss that?
We did miss
So
it.
yeah, these two candles here, a little bit ominous on the weekly chart. This is looks likely to form a bearish outside candle, maybe bearish engulfing candle, probably. And as we had one of those, obviously the week of 19th of June as well, this could be the all-time high in place, just below 34,000. So it teased everyone. And support, really, we're looking at 32,335 on a weekly closing basis. If we can get below there, you can see on the short-term charts, the 1 hour, the 4 hour, we're below the Ichimoku cloud. For me, that's a negative. Shows the trend is lower. Still got a few support levels to take out on a short-term basis, 32,300. But the 1 hour looks pretty dominant. We're just taken out 32,900. So extending lower, looking for lower prices. So yeah, same sort of formation now as I mean, what's China doing? China does what he wants anyway, but I mean, we've been sort of like, this has been quite ominous, this sort of like resistance level when we couldn't get back up above it July last year, and then failed again in front of it January this year. Pretty much, I think I talked about this 14,500 level last year for so long, and it has proved, although we did have a little squirt through it over a couple of week period, that 14,500 has proved to be a solid pivotal level. So yeah,
Okay,
that's where we are, Joe. Yeah.
Thank you very much, Steve. Let's move it on then to the gun to the head trade. So that's where Steve and I are going to pick trade ideas live on the stream. A couple of basic rules that we follow. Must have stops and targets, of course. We've got risk reward ratios of 2 to 1 or better. The trades are closed at 9 p.m. UK time unless the stops or the targets are hit. And from a risk management perspective, we risk 1% of our trading account on each of these ideas. So a maximum of 2% risk on a daily basis. Now, we've been doing this with the live account since the start of the year. It's been a challenge. I don't know if anybody else is feeling the same. It's been a bit of a bumpy ride. We had a couple of losses on Tuesday, with New Zealand dollar CAD and Euro Swiss. Yeah, it's been a bit red on the old screen of late, Steve. Really
Oh
struggled
yeah,
to
tell me
pick
about it.
anything from a technical perspective that's playing out. But maybe today's the day when we're starting to see some evidence maybe of some tops forming, that maybe we can catch a move. If these markets are going to behave in a technical fashion, then that is really when things start to work out a bit better for us, being technical analysts and looking at this market primarily from a technical basis.
Yeah.
So let's pick some ideas today, shall we? Anything taking your fancy? You look like you got gold on the screen there. Is that where
I
we're
have
going
got
today?
gold on the screen. I think it is, Joe. And listen, I went short of this at the start of the week and got a slap around the face, slap around the chops for that. And obviously, you got this dominant candle. Yesterday's price action makes me want to sell it. But you've got this morning doji star formation, this 3 candle formation here, which has led to this rally up into resistance at 1935. So it feels like I'm in no man's land at 1920. I'm looking for this sort of like either this push down towards 1893 and a break lower, putting a top in place, or is the shorter term trend more dominant, where we're sort of seeing this potential for an inverse head and shoulders on a short term time frame. It's pretty tricky, as I say, this dominant candle from yesterday. But if I feel like I want to sort of like, from a risk reward perspective, I think it sort of like favors like having your stop below 1914, something like that. I mean, ideally, probably below 1910 would be better. Looking for another retest at the 1935 level, but so I'm going against the grain. Well, actually, 4-hour candle is not, the price action isn't below the 4-hour cloud rather. So this looks okay, and this is the formation I think I'm going for. The neckline coming in at 1934. So let's try and get something out of there. I'll have to go to the my Oanda page, and then go for gold. Go for gold. Sounds like a film, Joe. And then look at something like this. This is what I'm looking at, trying to get a trade out of it. I mean, that's tight, 2 to 1 there. Yeah, not great. Doesn't feel great, but I'm going to go for it anyway. I'm going to stick to sort of the rules. We look for at least a 2 to 1 risk reward trade idea, and we're getting it from that. If the low gets taken out, it's tight. It's too tight, but let's see what I can do on the, when I'm going through the order. I might change my mind ever so slightly to try and get some better risk reward. Right, okay. I'm risking 1.03, so it's a bit naughty. Breaking the rules already. £17.94 risking, which will put the stop at 1913 spot 585. Targeting a move to 1946, but I'm sort of thinking 1934. But if it takes the support, that resistance out, it could get out to 1946. So I'm going to go for it, Joe.
Okay, done.
Desperate times, desperate measures.
Didn't even get a chance to wrap you on the risk about risking more than 1% there, but
No, I know.
we'll let it fly. Hopefully that's the winner, and I won't be moaning too much about it then. So good luck. I'm going to take a look. I was looking at the yen pairs. I think they look quite interesting, maybe because they've had such severe weakness of late that it might be due a little bit of a pullback. So I was looking at Aussie yen. I mean, it wasn't the best looking one, I've got to say, looking at it from a daily basis. But looking at the weekly chart was quite interesting. Major resistance here around 97.91. Maybe a little indication of some stalling in recent weeks. If we look at the daily, this doesn't fill me with too much joy. We have completed a bottom. We have seen a push to the upside. We have potentially completed a bullish flag, but we are reversing a bit on this. We haven't really kicked onto the upside in the way that you'd expect from a bullish flag pattern. Looking at the hourly chart, this is where it gets really interesting, is that we've got maybe a very small head and shoulders top that's formed here. We've got a neckline that comes in at 96.04. My entry was a little bit better than what it is now, but I wanted to sell that at market 95.93 with a stop at 96.23, which is just a little bit above these highs that we've posted over the last couple of hours. And the measured move of this head and shoulders top, let's just draw that on so everybody's clear about what I'm seeing here. I'm going with this as being the left shoulder, this being the neckline, this being the head, officially there, this being the right shoulder, and a sell-off lower. So the measurement from that head down from the neckline comes in at 95.27 as a target, roughly around 2.3 to 1 I've got on my chart, Steve.
Perfect, got it on, mate.
Okay,
See,
super.
there it is. There's the trade. There's our Oanda account showing the two positions. You obviously offside straight away because the spread.
Of course, yeah.
Ouch. So it's like when the spread is like 0.1 of the 1% that we're risking. Obviously shows you how tough it is, especially on an intraday basis, to try and get these short-term trades out. But we live by the sword, die by the sword.
Indeed. So we've got those on. Let's have a look at the data that's due out today, because it could be a pretty choppy one. As mentioned at the start, we've got 3 jobs data numbers from the States. We've got the US ADP at 1:15. We've got at 1:30 the US jobless claims. At 3 o'clock, we've got the US JOLTS job openings. And then at the same time, we've got the US ISM index non-manufacturing, followed by oil inventories. So plenty going on today. And this is all ahead of the big one tomorrow, which is the US employment report, or the non-farm payrolls. So potentially in for some more volatility over the next 24 to 48 hours. Okay, Steve, that's it from us.
Yep.
Thank you as always. We will be, well, Steve, will you be back tomorrow? I'm not in tomorrow.
Yes, I'll be here. I'll be
Okay.
here. I'll just show everyone our winning trades from today, obviously,
Yes,
and then
that would be good.
give them another winning trade for before the weekend. So
perfect. Sounds like a plan. Okay, let's leave it there. Thanks for watching, everybody, and we'll see you tomorrow.
cheers all.